Welcome to CEO Money. I'm Michael Yorba. Thanks for joining us. I've got Mish Schneider, Director of Trading Research and Education at Marketgauge. Mish, welcome to the show.
Thank you. Welcome. And actually, this is my second time, so it's so nice to be back with you.
I'm glad. There's been a lot of water under the bridge between the radio show and the TV show. Tell us all about it, and I understand you've got a new book out. So before we even do that, let me pause for just a minute. Give the new audience a flavor for who you are, what Marketgauge does, and then let's get into the book and what's happened since we last spoke.
Okay, great. Well, I started out in as a commodities trader on the commodities exchanges in New York at the World Trade Center back in the day, and I spent 12 years there. So that already put me into a unique profile because trading on the floor was rare, even if you look at it the entire world, and then being a woman trading on the floor made it even rarer. So I had a tremendous opportunity to learn from the top traders in a crazy on-your-feet environment and watching multiple markets at the same time. So I became a broker there, and then I left. And my other interesting part of my background was that I also have a degree in special education. So I spent in between years consulting with schools on inclusion, in the higher levels, which means that I was able to modify very, very complicated curriculum for kids with significant disabilities so they could participate in general education. So if you combine my floor trading experience and my education experience, what I've spent the last 10, 15 years with Marketgauge doing has been educating and also helping people learn how to trade by not necessarily do what I do, but let me show you the way, and then you can take it from there. So that's what Marketgauge does. Is we're a financial publishing company that specializes in tools, educational services, and recommendation services.
Got it. Good. Now, the new book?
So my book will be out in, they say spring 2019, but I understand that's a fashion spring, so it might be out closer to January, February.
Okay.
And it's called Plant Your Money Tree, A Guide to Growing Your Wealth. And the reason why I wrote this book is because I really wanted to do exactly what I said, was take my background of what I've learned from trading for most of my adult life and my special education and combine it so that the layperson has some kind of a roadmap. So the book is different than a lot of the self-help and personal finance books that are more general, diversify, save, this, that, and the other, in that I give you a technical roadmap that's very simple, but it's a lot less complicated than books that are written for technical traders who want to learn how to trade. So it's kind of in the middle, and therefore it captures a lot of people who feel intimidated by money, feel they'll never be able to grasp what's going on in the economy or the markets. And so I take them through 6 phases and how to identify them, and then what to do in each phase, whether it's making an investment, buying a home, the major you send your kid to college to study because it's a growing area, or if yourself want to change careers.
Okay, that's brilliant. I'd like to see if we can do further conversations on your book and just take little excerpts and talk about them as we go forward on the show.
Oh, that would be awesome.
I think that would probably work out for the viewing audience. All right, now you've got some ideas about what's happening with the stock market rates, commodities, dollar, inflation, stagflation, and so on. Give us the world as you see it from an economic point of view.
Okay, well, we have 2 worlds right now. We have the world of what is, and then we have the world of what ifs. And I think that really defines the market right now, because the what ifs are, well, what if the tariffs take hold, and what will that do to the economy? What if the Russian collusion case actually comes to pass with something tangible? What if China decides to retaliate on those so-called tariffs and stops buying back our debt, or decides that the US dollar is not going to be the key currency? So all those what ifs are factoring in, but the givens are, we have a very strong economy, we have an extremely low unemployment rate, The interest rates, according to the Federal Reserve, will continue to go up because they're extremely confident in the economy. The consumer confidence has been near an 18-year-old high. So that's why I'm saying is it's right now the is what's keeping the market up, and the what ifs is creating the volatility in the market so that you're getting these vicious swings, but buying winds up coming in. And of course, there's also the tax cuts that have given corporations the ability to buy back tremendous amounts of their own stock. For example, Apple, which just passed 1 trillion market cap, and literally has been the heavy hitter for keeping this market up now over the last couple of days. Even though it opened up 200 lower today, it's now basically unchanged. And part of it is, like I said, nobody really knows what's actually going to come to pass. Trump obviously tweets a lot of stuff, which is a new world. So going back to the book and what's going on is what you want to really look at is certain sectors to make your determination on what the market wants to do versus how it's reacting short term to any what ifs. So that's kind of where I'm pointing people to look. One would be the retail sector. So brick and mortar retail. I'm not necessarily talking about Amazon, because if you look at Amazon versus, say, what the typical retail chains are in malls, it's like two different worlds. But you want to keep retail. You want to keep those consumers in the malls shopping. So you want to look at the retail sector. You want to look at the Russell 2000, which is the small cap stocks. Mm-hmm. The reason why is because those 2,000 stocks in the Russell is much more predictive of the U.S. economy, or at least the sentiment about it, because those are companies that are in the United States. I mean, Apple's in the United States, but of course we know they outsource a lot.
Let me ask you a question about that.
Sure.
Because Russell 2000 is right after the private equity sector, and that has been having a heyday and a half. Based on the amount of money that's going into private equity, and then everybody wants to uplist and move into the variety of changes that they go through, all the way, if they can finally make it to the NYSE. Do you see that is actually a strong basis relative to what's going on in case, we always know if it really gets bad on the tariffs, problems are gonna show up. But based on what I'm seeing, there's a lot of movement in private equity, and that's a big employer, which drives a lot of these other economic numbers. I want to get your feedback on that.
Well, in terms of private equity, actually there's still a lot of cash on the sideline, which is very interesting because people are nervous, and, rightfully so, because of all the what ifs that I just mentioned earlier.
Yeah.
So I mean, if we had any kind of stability in terms of a quiet period of volatility in terms of, are we doing the tariffs? Are we not doing the tariffs? Does Mueller have a case or doesn't he have a case? Is China going to retaliate or aren't they going to retaliate? Are there going to be more tax cuts which could overheat the economy? And then, of course, what's going to happen with the dollar? If all of that comes to pass, I think that you will see that reflected in some value stocks that have been extremely undervalued, for sake of repeating the same word, compared to growth stocks like Facebook, Amazon, Google, Netflix.
Caterpillar, yeah.
Right. And Caterpillar actually Caterpillar is much more impacted. Did you just say Caterpillar? I just want to make sure I heard.
Yes.
Yeah, okay. That actually has done well, but it's one of those stocks that's going to be impacted if tariffs actually come to be. But that's a good place to actually watch. Because if you're going to have consumer confidence in terms of investor confidence in that, of course, that affects home building and real estate, which has actually been lagging throughout this thing. So I mentioned retail and IWM, which is the symbol for the Russell 2000, because I think that's really where you're going to see the manufacturing and then the demand for goods by people buying. Then you're going to look at transportation, because in order for you to have an equilibrium, you have to have supply and demand in equilibrium. Mm-hmm. So right now, today, what happened is transportation started taking off, and that brought everything with it, because as soon as, and my God, we can credit Charles Dow for this couple hundred years ago, if all of that continues, if goods and services are moving, it's all going to be good. So getting back to private equity, I think people are just waiting. It's so interesting how divided It is. If you ask some people, they think we're going to have a 30 to 50% correction in the market. You ask other people, and they think that this is a generational opportunity, and then we're going to go much higher. So I would just be more concerned right now with what's happening in those few sectors, the retail, the transportation, and in the small cap stocks in the United States, and just keep your eyes there.
Okay. You wanted to also talk about the economic impact of, say, the family sector. Let's bring that out for me.
The family sector? Did you?
Economic
modern family. Oh, okay. I'm sorry.
Modern family sector.
Yes. So I came up with an idea of a nucleus, like a modern family that I call the economic modern family, because this nucleus of 5 sectors and 1 index really, I think, tells you the whole picture. So I just mentioned 3. IWM, which is the Russell 2000, is the index. Brick and mortar retail is one of the sectors. Transportation is another sector. But there are a few other sectors to keep an eye on. And one of the things that you can do to gauge private equity money is in biotechnology, which has been another political football, by the way.
Yep.
Drug prices are going to go lower. We're going to deal with the opioid crisis. But of course, nothing really has gotten done yet. But that's where specs come in. That's where the speculators love to buy, because, you know, when biotechnology goes, it goes big. So it's made the modern family, not so much because it happens in the United States, because we know big pharma research happens all over the world, but because the specs, that's a really good way to see if people are coming into the market, and especially some of this private equity money. Then we have regional banks is another one, not big banks, regional banks. And the reason why I like to put the regional banks in there is because you can get a sense of what's happening in the smaller communities throughout the United States. Are they borrowing money? Are they building businesses? Are they buying houses, et cetera? And then finally, we have semiconductors, because semiconductors is sort of in between retail in the United States and biotechnology, which is heavily speculated. Obviously, computer chips have been an important growth area and will continue to grow. But again, you really can see whether or not tech companies are doing well and continuing to do well through the semiconductors. So if you put that all together, you look at semiconductors, biotechnology, retail, transportation, and regional banks, and then the Russell 2000, I think you're going to get a really good picture of what's happening. And right now, all of them are doing well. Even with these dips, they're holding.
Mish, thanks for being a guest on the show. I know we'll be talking a lot as we go forward.
Okay. Well, thank you so much, Michael. And thank you for the rest of the staff. And I hope to see you guys again.
Oh, you will. We'll be talking real
right.
soon. We're going to drill down into each one of those sectors and find out what's going on with each one of them, and you can bring out the forecast as things move along. Does that sound good?
That sounds great. And I can even have some fun with you and show you some visuals that I have to go along with it.
Absolutely. Send them on.
Okay, great. All right. Thank you so much, Michael. Have a wonderful day.
You too. You've been watching CEO Money with Michael Yorba. Thanks for joining us. Don't forget, like us on Facebook, follow us on Twitter, and subscribe to us on YouTube.